It's been a dramatic year for the oil markets. In the first half, prices crashed, US crude turned negative for the first time in history, and demand staged its biggest slump in 25 years. But since the start of November, oil has been in recovery mode, with Brent crude rallying back above $50. And on the supply side, OPEC and Russia agreed a deal to cautiously increase supply from January. So, where next for oil in 2021? Joining me to discuss is Malcolm Graham Wood. He's the founding partner at Hydrocarbon Capital. Malky, great to chat to you. Now, it's been such a volatile year for all assets, but oil in particular. How difficult has it been for investors and traders this year?
Well, good morning, Victoria. Nice to speak to you again. And yes, it's been a really tricky year. We had the sort of perfect storm because it wasn't just the virus that caused the trouble. Initially, obviously, it was the spat that occurred between Saudi Arabia and Russia, where Saudi Arabia initially looked like they were going to go for some market share, and a very dangerous thing to do when the Americans were producing as much as they were. So, the oil price went into free fall effectively, went from $60 down to $25. And then was hit immediately by the demand fall away that happened as a result of the virus, and that meant that as they often do, we often get falls of this nature. Probably every 7 or 8 years, the oil companies went into cutback mode straight away.
Yeah, so it's interesting you talked about the sort of frosty relations between Saudis and Russia. How would you describe relations between the two sides now as it comes to the oil markets? Because we know that OPEC and Russia have recently agreed to increase the supply from January, albeit modestly. What are you expecting in terms of the dynamics in 2021?
Well, it's always been reasonably pragmatic, and the two countries did get together in the spring. You mentioned in your lead up that West Texas went into negative, and that was just because we had a situation where a specific WTI contract rolled over when there was no place for the crude to be stocked, and so during this year so far, as we come to the end of this year, we found that stocks had increased dramatically, but they're already beginning to come back. The meeting that you referred to was one where OPEC Plus, as it's called, which is not just OPEC, nor just OPEC and Russia, but others as well. There's 23 countries involved in that debating chamber, decided that they were going to add just 500,000 barrels a day back in next January. And they think, and I tend to agree with them, that they will be seeing that, if not a bit more, of demand picking up in the beginning of the year. I think that I've been sort of cautious on the oil price for this year. I haven't actually changed my oil price from $40 for the year since the summer. I don't think there's any need to change it every 5 minutes. But as we come towards the end of the year, as you say, Brent going to $50, I'm personally getting to be probably one of the more excited commentators about the oil price. I think the upside could be quite substantial, and I think there are a number of good reasons for that. But as we come through into the new year, it's not just about the vaccine. It is obviously all about demand and economic strength. I tend to feel that the demand increase and I'm talking about crude, but I mean, obviously other commentators will talk about economic strength and GDP and everything else. But the GDP pickups that we might see in the beginning and middle of next year, I think they'll be really, really substantial. I mean, I saw that Wood Mackenzie, who I use a lot and used to work for, have said that the economic output in the beginning of next year could be $4 trillion, which is the size of a German economy picking up. And I think that we will see a really substantial pickup in demand as we go through next year, and therefore OPEC Plus will probably be more in charge than people think they're going to be.
So what are you then expecting from OPEC Plus in 2021? We've talked about the modest increase in supply from January, but looking further ahead, are you expecting more of the same, more extensions in terms of supply?
Well, I think when they realise that them very much back in charge again, they'll be able to control the oil price a bit. But we have a lot of unknowns at the moment, and one of them is what's going to happen in the US with President-elect Biden coming in. He's deemed to be anti-oil because he's keen on climate change. He's anti-fracking. He's anti-pipelines in the US and anti-licensing. And he's also allegedly wanting to get Iran back into the fold post the nuclear agreement being restructured. Of course, that won't happen because there are presidential elections in Iran in June of next year. So that probably will take a little while. And I think the interesting thing about the sort of climate change fossil fuel argument is that next year, as I say, we'll see probably the biggest worldwide economic bounce in 15 years. And on the back of that, there'll be an enormous a fight between climate change and the rebuilding economies. That people might just say, for the time being, yeah, we're very keen on climate change, but we've got a lot of economies to rebuild here, and the States will be top of the list of that.
The US EIA recently raised its outlook for Brent and WTI for 2021. It's now expecting average prices for Brent to be around $48.54 is the level that they gave. You said you're very bullish. How does that tie in with your expectations?
I'm a bit hard on that. I've just recently increased my number for next year. I was on $50 for next year, and I've gone to 55. It could be anything. I mean, during the year so far, apart from the sort of change in demand and supply and so on, the major and the super major companies have cut back their capex in a huge way. It always happens, as I said, when the oil price falls, capex comes down. I have calculated that they've cut 5 years worth of capex in 1 year. And interestingly, that's not normally that would sound like a huge number, but in other sectors of the market, like travel and so on, entertainment, the same thing has happened. And if you look at the international airlines business, but I think people will start traveling again in business and in leisure, and those numbers will pick up, and they will create a demand of their own. I mean, just take things like the British Airways taking out the whole of their jumbo jet fleet and things like that. The demand will pick up, and the supply will probably lag a little bit. I think OPEC might find themselves in an interesting position if the US production doesn't rise dramatically in the lower 48, and OPEC get a very strong position going. If they don't increase production too much too soon, I think they could be in a very strong position at the beginning of next year, and they should be able to follow that all the way through the year, providing economies pick up and oil demand picks up very strongly when those economies pick up. And whatever you say about whether renewables or energy transition or solar or wind and everything else, the amount of fossil fuels that people use in day-to-day business and refining is still going to be there. And I think the next 2 or 3 years we'll see quite a substantial pickup in demand.
All right, Malcolm, it was great to chat to you. Thanks so much for joining us.
Thank you very much. Nice to see you again.
And that was Malcolm Graham-Wood. He's the founding partner at Hydrocarbon Capital. I'm Victoria Scholar, and thank you so much for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.